Welcome back to the program. Great to have you with me as always. Please take a moment to subscribe and like the video. Tell your friends and family the same. A quick check on the Federal Reserve's interest rate decision today. The FOMC, the Federal Open Market Committee, the group that controls interest rate decisions at the Fed, met for a two-day meeting that concluded today at 2 p.m. As expected, the Fed left rates unchanged at 5.25 to 5.5%. That's the federal funds rate, the overnight rate the banks use to manage their daily reserve requirements with each other. It's a very hawkish statement. Chairman Powell in his press conference at 2:30 was also hawkish, and the Fed went on to say some very obvious things about inflation. Most importantly, in their Fed statement, which you can see at federalreserve.gov, go to news and events and find their Federal Open Market Committee FOMC statement for January 31st, released at 2 p.m. One of the things that got everyone's attention, of course, are these two lines. Inflation has eased over the past year, but remains elevated. And the economic outlook is uncertain, and the committee remains highly attentive to inflation risks. Not good for those bullish who wanted the Fed to lower rates to allow the stock market to keep rallying. Remember now, dovish comments by Powell in December is what sparked this multi-week rally in the S&P and the Dow. Then the other line that got the market's attention was the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. So a very hawkish statement, spooked the bulls, equity markets down, dollar higher, dollar starting around 108.50 at 2 p.m., fell to 107.95, finished around 108.16. Higher rates, good for the dollar, lower rates, bad for the dollar. Of course, the S&P 500 and the Dow Jones Industrial and all other indexes took a hammering. S&P down 79 to 4,845. The Dow down 317 to 38,150. The long end of the yield curve rallied, though. Higher prices, lower interest rates, and the short end of the yield curve kind of sold off a bit. Lower prices, higher rates. 10-year back below 4%, not good. 30-year still above 4%, that's good. We still have an inflation problem. Remember, the price level hasn't fallen. The price level is now 20% higher than it was in January 2021. There's no speculation that the Fed is going to keep rates high in order to bring the price level back down to where it was in January 2021. But nonetheless, they're not going to cut rates anytime soon. As I have been telling you now for many weeks, I am looking for another rate hike. That seems to be diminishing in probability, but we'll see what data brings. As always, when the Fed talks about what their next steps are, in assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee will be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. And they go on to say they take into account a wide range of information, including reading on the labor market, inflation pressures, inflation expectations, and financial market and international developments. So I say good news, bad for stocks, but I told you I'm a seller of these rallies. One last thing I want to mention is you may have seen in the news overnight that 2 police officers in New York City were beat up and thrown to the ground by 4 illegal immigrants that entered the country just recently and were shipped to New York City. They were arrested, charged, and then released with no bail. That's got to be very alarming for some. We can't have people coming into the country illegally and then beating up police officers and getting away with it. Like to spook New York City residents, and I wonder if this shouldn't get some more attention, but a little bit alarming that that was allowed to happen. Apparently the police officers were injured, and yet the folks that did it are back on the street today. Okay, that's all I have for you today. Always try to buy American.